Unless you have enough money to pay for a house yourself, and most people don't, you'll need a mortgage loan to finance the purchase of your home. For many first-time home buyers, mortgages are stressful, but home financing doesn't have to be difficult. With a little preparation and basic understanding of how the process works, applying for a mortgage and closing your loan will be easy and anxiety-free. There are several ways to secure a mortgage. You can work with a bank or credit union, a mortgage banker, or a mortgage broker. It isn't uncommon for a large lender to have more than 100 different mortgage programs. A reputable industry professional can help you determine which mortgage program is best for you and should provide you with advice throughout the entire loan process. Before looking at your mortgage options, it's important to understand mortgage rates and points. Simply put, your mortgage rate is the interest rate or fee you're charged to borrow money from your lender. Mortgage rates are tied to a particular economic index. How your mortgage rate moves up or down, or whether it moves at all, will depend on the mortgage you select. When you obtain a mortgage, you have the ability to lower your interest rate. To do this, you can purchase points. Think of points as a form of prepaid interest. 1 point equals 1% of your overall loan amount. If you choose to pay points, you'll be able to get a lower rate than had you not paid points. Your credit history is an important element mortgage lenders consider when deciding whether or not to grant you a loan. Your credit report contains a credit risk score, which is an assessment of your credit worthiness. Before applying for a mortgage, get a copy of your credit report and review it for errors and discrepancies. Read the report carefully. If you find any inaccuracies, contact each of the 3 major credit bureaus, TransUnion, Experian, and Equifax, to have them cleared from your report. As we said earlier, there are different mortgage options. The most common is a fixed-rate mortgage, which has a predetermined or fixed interest rate over the entire term of the loan. Many people like this type of loan because it offers certainty. The interest rate never changes. If you're planning to stay in the same home for a very long time, then a fixed-rate program might be the right mortgage for you. Adjustable rate mortgages, or ARMs, are mortgage programs that are fixed for an introductory period such as 1, 3, 5, or 7 years. After the fixed period, the rate adjusts based on a predetermined index. If the index goes up, so does your interest rate and mortgage payment. Conversely, a drop in the index will reduce your rate and payment. ARMs usually offer consumers lower initial rates and therefore a lower initial monthly mortgage payment than a comparable fixed-rate loan. One popular adjustable rate mortgage is an interest-only loan. With this type of mortgage, you pay only the interest on your loan for a 1, 3, 5, or 7-year period of time. After that initial term, you will be required to make a payment that accounts for both the principal and interest on your loan. With any loan, when calculating the cost of your mortgage payment, if your down payment is less than 20% of the purchase price of your home, many lenders require you to pay private mortgage insurance, known as PMI. This covers the lender in case you default on your loan. Whatever type of mortgage is right for you, it's important to at least pre-qualify for a loan before beginning your search for a home. Pre-qualification is a discussion between you and a lender about how large a loan you can afford. The lender doesn't verify anything. Pre-approval is a lengthier process that includes checking your credit history in addition to verifying assets, employment, income, liabilities, and available cash reserves. Whether you decide to work with a mortgage banker, credit union, or another lending entity, choose a reputable, experienced company that isn't likely to go out of business when rates increase. Seek out recommendations from your Houserebate agent, relatives, and friends. For more information on home financing and hundreds of other topics, check out the national bestseller, Home Buying by the Experts, at www.homebuyingbytheexperts.com or call 888-836-5675.